Form 1099-A, Acquisition or Abandonment of Secured Property. Used by lenders when they acquire or take possession of property due to foreclosure or abandonment. Key points, filed by banks or lenders. Sent to the IRS and the borrower, you. Reports foreclosure or repossessed property, like a house or car. May affect capital gains or losses and/or cancellation of debt reporting, which might trigger Form 1099-C. Example use, if your home is foreclosed and the bank takes it back, they file a 1099-A showing the date they acquired it, the outstanding balance, the fair market value of the property. Form 1099-B, proceeds from broker and barter exchange transactions used by brokers to report proceeds from the sale of stocks, bonds, cryptocurrencies, and other securities on your behalf. Key points, filed by brokerages, barter exchanges, or online platforms. Reports sales or exchanges of investments. Helps the IRS calculate capital gains or losses. Includes, date of acquisition and sale, proceeds, cost basis, type of gain/loss, short or long term. Example use, if you sold shares of Tesla stock through Robinhood, they'll issue you a 1099-B to report the proceeds and your cost basis. In short, form purpose: who files it, who receives it. 1099-A property foreclosed or abandoned lender borrower. 1099-B investment or asset sales, stocks, crypto, broker or exchange investor/taxpayer. 1. Standard use in tax filings, traditional use, Form 1099-A in standard tax context when a property is foreclosed or repossessed. Form 1099-A helps determine if you have a capital gain or loss. You may also receive a Form 1099-C if the lender cancels your remaining debt, which could be taxable. IRS uses this to assess if you gained from the foreclosure, if fair market value greater than loan balance. You should be taxed on any forgiven debt, income. Form 1099-B in standard tax context required when you sell stocks, bonds, crypto, or mutual funds. You must report cost basis, what you paid, proceeds, what you sold it for, gain or loss, short-term or long-term. Used for capital gains taxes on your IRS Form 8949 and Schedule D. 2. Advanced use in sovereignty and private creditor strategies. Warning sign, for educational purposes only. These are advanced strategies used by private individuals who've corrected their status and operate in the private, creditor/principal role. Form 1099-A as a tool for asset acquisition, promissory note and trust strategy. Some private educators teach a process where you act as the secured party creditor and use your birthright trust, strawman account, to acquire property. Here's the outline of that theory. Core concepts. You are the beneficiary of a trust created via your birth certificate. The government acts as the trustee, using your labor as collateral for credit creation. A 1099-A is used to show that an asset has been acquired by a third party, you, via trust authority. Process, simplified. 1. Create a security agreement and trust showing you are the secured party. 2. Use a promissory note or private credit instrument to initiate acquisition of an asset, e.g., house, car. 3. Use Form 1099-A to document that the property was acquired/abandoned and that the debt is being absorbed by the trust. 4. Match it with Form 1096, summary, and submit to IRS for lawful processing. Used correctly, it creates a private claim on the asset and enters a record in IRS databases. Form 1099-B in private remedy context. Some advanced strategies use Form 1099-B to report barter transactions between trusts, private parties, or PMAs. Offset or eliminate debts by balancing books with equivalent credits or proceeds in commercial accounting terms. Show disposition of value for commercial remedy or for correcting IRS records via form matchings, e.g., 1099 OID, 1099-C, 1096. Summary of uses. Form Standard Use Advanced Use, Private Strategy 1099A Foreclosures, Repossessions Claim Acquisition via Trust, Discharge Theory, Asset Redemption. 1099B Investment Sales, Gains/Losses Reporting Document Barter, Disposition of Trust Value, or Private Exchanges. Form 1099C, Cancellation of Debt. What it is. Form 1099C is used by lenders and creditors to report that they have canceled or forgiven $600 or more of debt that you legally owed them. Key details. Issued when a creditor writes off a debt, credit card, loan, mortgage, etc. Sent to the IRS. The debtor, you, the IRS considers canceled debt as taxable income, unless an exception applies. Why it matters. When debt is forgiven, the IRS views it as if you received income, because you were relieved from an obligation to pay. That income is reportable and possibly taxable. Example. You owed $25,000 on a credit card. The creditor forgives the debt and sends a 1099-C. You now may owe income taxes on that $25,000, unless you qualify for an exemption. Common exceptions to taxation. You may not have to pay taxes on the canceled debt if you were insolvent, your debt's greater than assets. The debt was discharged in bankruptcy. It was qualified mortgage debt, under certain conditions. The cancellation was a gift or inheritance. How it's used in advanced strategy, private remedy use in creditor/secured party strategies. Some use Form 1099-C2. Show the discharge of a debt via trust or accounting method. Signal to the IRS that a private instrument or offset has satisfied a public debt. Pair with 1099-A or 1099 OID to show closure of a commercial transaction. Caution. This approach must be well documented and supported by private agreements, trusts, and IRS compliance strategy. It's not for casual use and may result in audits or legal trouble if used incorrectly. Summary comparison, 1099A versus 1099B versus 1099C. Form purpose used by IRS view. 1099A property foreclosed or abandoned lender may result in capital gain/loss. 1099B sale of investments/barter broker/exchange used for capital gain/loss. 1099C canceled debt, $600 plus, lender or creditor treated as income unless exempt.